I want to point out Home Depot over the last 10 years up 28% per year. Joe Feldman, does the next decade look as rosy for these guys as Home Depot of the last 10 years?
Well, the big guys keep getting bigger. They keep taking market share. So, yeah, we think things do look pretty rosy. There's going to be some bumps in the road. For
Right.
example, Home Depot, things are slowing a little bit, but that'll be temporary. It'll pass through time, and they'll be continue to grow over the longer
Right.
term for sure.
One of the most important things in the Bloomberg, folks, in terms of like why do you get a Bloomberg terminal in that, is you can see the float, the institutional ownership versus the float in a couple key clicks. And there's two groups. There's Home Depot and Amazon. It's 72% afloat. And Joe Feldman, the rest, like Walmart, are at 60-ish% afloat. What's the partition there for institutions?
Yeah, I think they're just like these fortress companies that are like I said, they're dominating in retail. They execute really well. They're gaining market share. They've got, customers that want to go and shop at those stores. And as leaders in their respective spaces, that it just keeps institutions really invested in some of these names. And I think that, there's others. I think Walmart, Target, Lowe's, I think are like that. Costco, you could put in that camp as well. So there's definitely some big behemoth retailers that continue to consolidate the share out there that's available to them.
Joe, this sounds like a great story. It sounds like it would be a buy. Walmart shares up about 4%, 4.6% on the year. Today, after beating earnings, beating forecasts across the board, better than expected, showing that they are continuing to see gains even post-pandemic. Shares down 1.4% right now in pre-market trading. How do you make sense of this?
Yeah, candidly, it's a little surprising to me. I mean, and especially with the setup for the back half, where Walmart's got so much momentum going into back to school and into holiday. They've clearly got the inventory as much as their supply chain pressures out there. Their inventory was up nicely. So they're set up very well for a back half. I'm a little surprised that customers are selling or investors are selling on this news. I think that they performed quite well. Traffic was up. Their same store sales were better than expected. They raised their full year guidance. I mean, there's a lot of things going well. And even with that e-commerce sales number coming in a little bit lighter at 6%, we were hoping it was going to be more like 10%. Last year, it was up 97%. So 6 on top of 97 is not so bad. I'm okay with that. And I think that they're going to continue to execute well through this period. I mean, especially with the fiscal stimulus and the government support that's there for this consumer, with the child tax credit, it's the setup is still very good for the back half for Walmart.
You mentioned the key issue that I think a lot of people are pointing to, the disappointment in e-commerce sales and the progress made there or lack thereof relative to the boom of last year. And there does seem to be a concern about this horse race. Who's going to get ahead when it comes to online sales? Because this is the new economy. What should investors be looking for in terms of investment in the e-commerce space, in terms of market share, in terms of progress, to make them feel like the store is going to come out ahead in the era of Walmart, Target, and Amazon?
Well, listen, we've been thinking that sales online were going to slow this year, and they clearly have. And doing positive performance is still very good. A lot of us would have thought against a 97% increase last year that you'd see a negative even. And so I think that, between Walmart, Amazon, Target, they're continuing to gain eyeballs online and gain market share online. And I think that that's coming at the expense of a lot of weaker players. I think Walmart, Amazon, Target, again, Costco, the others have done a very good job of providing a very broad range of product to be able to get and procure online. And we see them continuing to gain market share. Even Amazon, look, they had their second quarter was soft by Amazon standards, right? Their Prime Day was a little bit softer than we all expected, and the quarter itself was a little softer. So, that trend line against the comparison from last year makes some sense. And when you look at it on a 2-year basis, compared to 2019 levels pre-COVID, things are looking pretty solid for a lot of these guys.